All right, so let's dive into this rate cut from the Bank of Thailand. It seems like just about everyone was caught off guard by this.
Yeah, it was definitely a surprise. I mean, their first rate cut in 4 years. And it wasn't even a close call either. The vote was 5-2, according to their meeting notes, so there was some internal disagreement there.
Definitely a big deal. The Bangkok Post even called it a big deal in all caps. I thought that was pretty funny. But so we've got their press release and these meeting notes and this on-the-ground reporting from the Bangkok Post. Plus, we found some really interesting data from their press conference.
Yeah, we should definitely look at those charts in a bit because I think they really help tell the story here.
Yeah, for sure. So I guess the big question on everyone's mind is, why now? Why would they cut rates now after holding off for so long?
Well, inflation is the obvious place to start. They're way below their target right now. In their press release, they acknowledge that consumer prices only rose 0.35% in August compared to a year ago.
Wow, yeah, that is low. So they've got some breathing room to lower rates without sending prices through the roof. But what about all the talk about high household debt in Thailand? I mean, the Bangkok Post mentioned that as a concern.
Right, and that's the balancing act they're always trying to manage.
Because if it gets too easy to borrow money, then won't people just end up racking up even more debt?
Exactly. Lower rates can stimulate the economy in the short term, for sure. Businesses borrow more to invest. Consumers maybe feel more comfortable buying a house or a car. But if too many people are taking on too much debt, then it can create risks down the road.
So it's this constant push and pull between encouraging growth and preventing a crisis.
Yeah, you could say that.
It's like they're trying to thread a needle.
And it's even more complicated when you factor in the uneven nature of the recovery.
You mean how some parts of the economy are doing better than others?
Precisely. The Bank of Thailand even admitted that in their statement.
Huh, interesting. So just to recap here for a second, the Bank of Thailand has made this surprise rate cut in an attempt to stimulate the economy, even though there are concerns about high household debt.
And despite some apparent internal disagreement about whether or not this was the right move.
Right, and all of this is happening against the backdrop of a global economy that's still trying to find its footing.
And I think that's where the data becomes really illuminating because it helps us understand the context for this decision a little better.
Okay, well, let's take a look at those charts then, because I'm really curious to see what story they tell.
So one of the charts that really jumped out at me was this comparison of interest rate trends. So you've got Thailand on the one hand, and then you've got all these other major economies on the other.
Right, like the U.S. and Europe.
Exactly. And you can see that throughout 2022 and even into early 2023, when those other countries were hiking rates aggressively, Thailand was taking a much more cautious approach. Their rate hikes were smaller and they started later.
So they were kind of lagging behind the curve a bit.
Yeah, you could say that. And now they're cutting rates while many others are holding steady or even still considering further hikes. It's a bold move for sure. And it makes you wonder what they're seeing that we're not.
Right, like what does their data tell them about the potential impact of this rate cut on their economy?
Well, one thing that stood out to me was their GDP growth projections.
Okay.
They've actually revised their 2024 forecast upward to 2.7%, which is pretty impressive considering the global outlook.
So they're expecting things to pick up.
That's what they're saying.
Yeah.
They did lower their 2025 forecast slightly to 2.9%, but even that is still pretty healthy growth.
Okay, but they keep mentioning this uneven recovery. So who are the winners and losers in all of this?
Yeah, that's the million-dollar question, isn't it? I mean, on one hand, you've got certain sectors that are booming, but on the other hand, you have areas like merchandise exports and manufacturing that are really struggling.
And what about SMEs? Because I remember the Bangkok Post mentioning concerns about how the rate cut might not be enough to help them.
Yeah, SMEs are definitely a concern. The Bank of Thailand even highlighted them in their statement.
Huh. So even with lower interest rates, it sounds like businesses, especially smaller ones, might not be rushing to borrow money.
It's not looking good. The data on loan growth is pretty clear across the board. We're seeing a decline in business loan growth, especially for SMEs. And it's not just businesses either. Even consumer loans are down.
Really?
Yeah. Higher purchase loans and credit card loans are both down according to the Bank of Thailand's data.
Wow. So even with a rate cut, it seems like both consumers and businesses are hesitant to take on more debt.
It's like they're pumping the brakes while the Bank of Thailand is trying to step on the gas.
What a mess. So what's going on here? Are banks just being more cautious about lending, or is it something more fundamental about the economy?
It's probably a mix of both, to be honest. I mean, there's definitely a lot of uncertainty in the air right now.
It's wild, right? Like, on the one hand, the Bank of Thailand wants everyone to borrow and spend more. But then you look at the actual data and businesses and consumers are like, nah, we'll pass.
Yeah, it's definitely a head scratcher. And I think to really understand what's going on here, we have to talk about the elephant in the room.
You mean the political pressure from the government?
Exactly. The Bangkok Post was pretty explicit about that.
Yeah, they mentioned how the government has been pushing for a rate cut for months.
Yeah.
And how this whole thing with the new central bank chairman seems to be dragging on.
It's like everyone's waiting to see who they appoint and what that means for monetary policy going forward.
It's giving serious economic chess match vibes.
Totally. And the stakes are high. Will the Bank of Thailand be able to maintain its independence? Or will the government try to pressure them into making decisions that are more about politics than economics?
It's a tough spot to be in, for sure, especially with this whole rate cut being framed as a one-time thing.
Right. It's like they're trying to appease the government without rocking the boat too much.
So will it work? I mean, is this single rate cut really going to be enough to satisfy the government's appetite for stimulus?
It's hard to say for sure. I mean, it's definitely a step in the direction they've been pushing for. But it also feels like a bit of a half measure, doesn't it?
Yeah, kind of. Like they're trying to find that middle ground between supporting growth and maintaining stability, which is easier said than done most of the time.
And let's not forget about the human side of all of this, too. I mean, at the end of the day, these economic policies have a real impact on people's lives.
For sure. It's about more than just numbers on a spreadsheet. It's about whether or not people can afford to put food on the table or keep a roof over their heads.
Exactly. So while we can analyze the data and make predictions until we're blue in the face, the truth is we're still in uncharted territory here.
We'll just have to wait and see how it all plays out. But for our listeners out there, keep an eye on Thailand, because this whole rate cut saga might be a sign of even bigger changes to come. And that's it for our deep dive this week. Thanks for listening.